We'll get back to tracking individual stocks. As we were telling you, the auto space is in focus. Aniket Mhatre, who's the institutional research analyst at HDFC Securities, is with us. Aniket, hi, good morning. First, tell me about tyre companies, because it's been a spectacular showing from them. Whether it's MRF, CEAT, the expectation is even Apollo could do well. But is there still scope to go on the upside as far as the stock is concerned?
Sure. CEAT and MRF have reported very strong set of numbers. Unfortunately, we don't cover any of them. But what I can tell you clearly is that the margin that they have reported is much ahead of expectations. For instance, CEAT, as you rightly had pointed out earlier, has reported a 550 basis points margin improvement on a sequential basis. That's on the back of clearly softening in input costs, as also the price hikes that they have taken. For the likes of CEAT and MRF, what has happened is that the two-wheeler category, tyre category, they have taken price increase hikes with a lag, and which is what is reflecting right now in Q4. Whereas in Apollo's case, we saw bulk of the margin improvement come in Q3 itself. So while we expect Apollo also to report margin improvement, we don't think that the margin improvement quantum would be as high as that reported by CEAT and MRF. Of course, next week Apollo's results should be out. We should look at them, but Apollo, bulk of the margin improvement in our view is already visible in Q3 numbers.
Okay. There's very interesting thing that's playing out in the two-wheeler space, right? If you compare TVS and Hero, both the companies are now at 50,000 crore market cap, but very different earnings profile. I mean, with TVS's exposure to the export market. But what are your thoughts between the two? Which one do you prefer?
So we do prefer, at the outset, we have a buy on both TVS and Hero for different reasons, of course. But between the two, if you ask us, our top pick is TVS at the moment between the two, for the simple reason that if you look at FY23 as a whole, it continues to outperform the industry, right? If you look at scooters market, they have gained 200 basis points market share to almost 23.5% last year. And in motorcycles also, they have gained 100 basis points market share to 9 or close to 9% at the moment. And with supply constraints now largely behind them, we expect them to continue to outperform. Their Raider in 125 is doing exceedingly well, and even Apache continues to do well. And the 125cc and above category in motorcycles is what is driving growth in motorcycles at the moment, and which is where TVS has a very strong play there, which is why we continue to like TVS over Hero. The other point I would like to highlight is on the EV space. Even on EVs, TVS is emerged as the second largest player and has already sold 97,000 units last year, right? Which is also very, very commendable. So amongst the listed peers, even in the EV space, I think TVS is well ahead of its peers.
Okay, and on a valuation parameter, how do both these stocks stack up? Is there more valuation headroom for either name?
So if you look at Hero, yes, Hero has underperformed over the last year or so, and TVS has done well. But if you look at the last 6 months, for instance, even TVS has been range bound between that 1050 to 1100 levels, right? It has also not moved too much in the last 6 months. So valuations for both, I would say, is attractive. TVS has always been expensive, and it will continue to remain expensive given its outperformance to peers. And relative to what it used to trade at around 27 to 29 times earlier, now it is at around 24 times. So I think there is still reasonable headroom for both in terms of valuations.
Okay, reasonable headroom for both these stocks in terms of valuations. The other space that has started to do quite well is the auto ancillary space. We got a few numbers so far. Sona BLW was a very strong set of numbers. Sundaram Fasteners is a good set of numbers. Double-digit growth. There's margin recovery. From this entire gamut, what are your top picks now?
Right. So again, unfortunately, we don't cover both of the names, but within the auto ancillary space, our topic is Bharat Forge, the result for whom will be out today. Bharat Forge, for instance, the standalone entity, they have a great exposure to CVs, PVs, and non-auto space. And in defense, they are expected to win an order anytime soon now from domestic. While exports, they have already won close to a 2,000 crore order, which is to be executed executable over the next 3 years, which will be the key earnings driver for exports for them. There has been concerns around the US Class 8 slowdown in the case of Bharat Forge, but that the new defense order should help offset those concerns. Plus, they are ramping up in PV forging globally. They have new orders that they have won in the for exports to Europe, which will help them offset some of the slowdown. Even in the domestic space, as I have pointed out, they have already finished their final trials for the ATAGs, and orders are expected anytime soon. That should be a very big growth driver. Apart from that, they have recently acquired JS Autocast, which is expected to deliver very strong growth trajectory, given that they are into aluminium castings, and that space is seeing a lot of demand momentum incrementally. So all put together, I think we like Bharat Forge at these levels. I think the valuations are pretty reasonable for the upside potential that the stock can show.
Okay, and Bharat Forge's numbers, as you said, are coming out later today. Expected to be pretty good. A tonnage growth of 15% is what the street is forecasting. This compares to 17% last quarter. So consistent growth is what they're seeing in tonnage. Thanks a lot for joining in, Aniket. Appreciate your thoughts. Have a good day. Let's get